Hi, it's Larry Gaines, Paracycle Trading. Well, I'm back on the trading desk today. I was gone for the past few days. Went to the New York Money Show, and it was a really great event. So I was privileged to be able to speak there and got to talk to a lot of people and talk shop. So that was a lot of fun. Really enjoyed it. But anyway, I wanted to go through the markets here today. We had a lot of different key reversals today. Our system has been short for a while, and I put this out and talked about it quite a bit the last week or so, different relationships in the market to be watching for. And one of the main ones has been the US dollar, which broke a lot higher today, and it really started pushing the markets lower, along with the Fed minutes coming out, showing that there is a little bit of dissension as far as how long this stimulus package should act or last, and that got the markets a little bit spooked. But indicators by themselves are, we're telling you that the market was starting to stall, and I'll go through a lot of this for you right now in this video. But first, if you've not received my free ebook, please go ahead and get it. I think you'll really like it. Put your name, email address in here. Just go to paracycletrading.com, and you'll see top 15 option trading strategies. And then the other one we also have one on futures. Now, we had a lot of really great trade setups today in our trading room. I traded for the first about 90 minutes, and I had I think about 7 trades, 6 winners, 1 loser. Made over $200 cumulative per contract and over 44% return. But we had a lot of our guys, several of our members like to trade gold, and they really cleaned up. They made one of my members made over $2,000 a contract, and he trades more than he trades quite a few contracts, so you can do the math. But you can see here gold. This is our our platform. Now we've got a scanner that we're going to be releasing here in the next few days. We're actually adding to it, adding some additional rules to it as far as the scanning, what we're looking for. So we're about complete, but this is a little bit part of it. And this is gold. This shows you it's been in. This is what we call a squeeze. It's been in a squeeze, a sideways pattern here, looking for a breakout. And these dotted, color-coded dots here indicate directionally which way that potentially could be. And when we have it a yellow dot, that indicates potentially to the downside. The purple indicates the upside. Now, our trading model actually went short right here on the 8th of February, so that was last week. And then we were just looking for this thing to break down. This was indicating that the direction, the high probability direction, would be to the downside, and you can see what happened today. So by using our system, you would have been able to spot this on the 8th of February. Again, by using our system, you could see that based on this rules that we have programmed into the scanner, it tells you that there's going to be a potential for a major breakout or breakdown, and this was a breakdown. So if you're interested in something like this, then I would highly recommend that you come join our service, because we'll be releasing this and we'll be giving this, which doesn't show you all the ins and outs of the system, but if you're a member, you'll get everything. And here again was another indication of a potential break to the downside. These dots, and that's all explained within the scanner that we use. And our system actually went short here. This was at 40400 today. So if you've been following our model, you too could have made a lot of money today if you wanted to trade gold. Now let's just go ahead and dissect the markets here and just look to see from the big picture down what we're looking at. I showed you the picture of gold. I'm going to show you the dollar in a minute, but first I thought we'd get an overview with the S&P 500 cash. So using our trading model, here's the weekly chart. This is a long-term trend. It's currently gone neutral. So we're with our model, we're currently neutral. This went neutral back on the week ending on the 8th of February. So that being said, you can see now we're starting to pull back a little bit. We'll see if this is a continuation of momentum to the downside, but we've been in this trend on a long-term basis using our system, just our system signal, since the 1st of January. So January and all the way through February towards the end, and now we're neutral. Now here's the S&P 500 cash on the medium term or the daily time frame, And this is the beauty of having a system. And if you have one that's consistent with high probability of entries and good probability of getting in at cycle highs and lows or volatility breakouts, it really can help you with your trading or planning your trades. So we had the system went actually short on the 13th of February. That was last week. You can see that it stayed through this little uptrend, but today we had a big move to the downside. So we'll see what happens. It broke and closed below this 15 EMA. This is the 8 EMA. It's been really hugging this EMA. It's been a really good little trend to the upside based on that. And we've got this nice little channel right here as well. So we broke down to the downside here today. We're coming in right to the trend line right here, channel trend line. I'm going to probably redraw this on a different chart because here's a pivot low. It should be a little bit different than what I have right here, so I'll show you that in just a second. But I wanted to point out the support is right here about 14.95 and that level right there. But currently our model has the market down on the medium-term trend, and we'll see how much fall through there is. Now trading is all about probabilities because there's no 100% sure bet of anything in trading, but the high probabilities are set by the tools that you use. And if you can look here, we have our model that's based on cycle lows and highs. It went short. Now also, when you start breaking these moving averages, that will create a lot of momentum as well. And there are a lot of systems that are based on moving averages, just moving averages alone, and just traders playing the moving averages. And you can see the 8 EMA here broke. You've got the 21 right here coming in at 1506, and then we'll just throw the Fibonacci retracement level in here from the breakout from the lows back here on the 31st of December to the high that we made yesterday. So it wouldn't be too uncommon, or it'd be actually a big high probability that we'll get probably a retracement right back to this 25% Fibonacci retracement, which comes in at 1497, 1495, which is also right here where you can see it broke out, consolidated, and held. So I'm expecting this thing to eventually, within the next few days, probably come back and test this level here. Wouldn't be surprised to see it hold up right here. Now, if that doesn't hold, then it's down to the 382, 1479, and then further down. But so you're going to have good support here at 1505, the 21, and then this 1497 here. So we'll see if this continuation of this move there's fall through tomorrow, or for the next few days, or if it's just going to stall out here and have buying come back in. We'll go through the other charts here, and the Fed, that Fed minutes today got the markets a little bit spooked, like I mentioned earlier. So be on the watch out for if they release any other comments regarding, perhaps pulling back on some of the stimulus. Now, I've been talking about the correlations between the various currencies and how they could impact the markets, and the dollar's a big part of that that puzzle or that equation. And you can see here, here the dollar broke out of this trend line, broke all these moving averages that were compressed together. And this happened back on the 7th of February, and then it's been a really strong move to the upside, and right now it's coming right into the 200-day moving average, which it actually closed above today. So it's a very powerful move up. The dollar, everything's priced in dollars, most world commodities, so as dollar goes up, the price of the commodities go higher, and you'll start seeing liquidation of those commodities such as oil, basic materials, things like that, and then that has a relationship or an effect on the equity markets. So keep an eye on the dollar, and the other parts of that correlation are the yen and the euro euro currency. One major thing I wanted to point out was a reversal pattern. So we had a higher high today, and we closed lower. That is a key reversal. So a lot of times, this type of key reversal will ignite a trend or shift the trend from where it was to the upside or downside. You can see here this was a key reversal to the downside. We had a lower low, higher high, and then look what happened. So these are key. Look, here's another one. Here's a key reversal, a lower low, a higher high, closed pretty much on the highs, almost above the prior day bar. And here's the same thing. So these are technical patterns that sometimes can shift the trend, and you'll see a major trend shift, which can last. The last time it happened was back here at the first of the year. So this has lasted almost 3 months. And here is another reversal right here. This was November, and this lasted 2 months. So that's a key reversal there. Here's a reversal on the NASDAQ right here today. You can see opened up higher, made a new high, closed on below the prior day's bar. Here's another one to the upside. That was on the 31st. Here's the other one we were talking about earlier on the 16th of November. So these are patterns to watch for. Good luck trading tomorrow, and I'll have a more update tomorrow. Good luck. One last thing before I sign off. I'm having a free webinar tomorrow night at 7 Central, and it'll be on weekly options. So you don't want to miss it. It'll be starting at 7 o'clock. So on this email, there will be a registration link at the bottom. So sign up if you have not already.